forced sellers are disappearing, demand is slowly returning, and the market becomes harder to push lower than it is to push higher. And that is the difference between making a prediction and recognizing a change in the market. Bitcoin is bottoming without a Fed rescue. Now we get the Fed. Our boy Kevin Warsh. I would not say that the Fed has no tools left. That itself is not accurate. And the Fed can still change interest rates and make money cheap. It can change the size of its balance sheet and it can provide emergency liquidity. But the stronger argument is that the Fed does not have a painless tool. Like in the July meeting, the Fed kept interest rates between 3.5% and 3.75%. Three officials actually dissented because they wanted a quarterly point rate hike, not a cut, a hike. They wanted to make money more expensive, right? And July inflation came approximately about 3.4% headline and 2.5% core. So inflation is not moving in the right direction, but it has not disappeared. Since then, the weaker unemployment, retail sales, inflation data has caused the market to rapidly reduce probability of another rate hike. At the time of this draft, markets are pricing about only a 30% of a September rate hike. But economists are not only expecting a series of aggressive cuts. The base case is increasingly that the Fed simply holds rates where they are. They're literally just holding rates. Like my thoughts are Warsh and the Fed are waiting for Trump to figure out what he's going to do with this Iran situation. Because as we said in previous videos, oil and energy is the cost of living, right? If oil and energy becomes more expensive, your life tends to become more expensive. But when oil and energy becomes more abundant and more cheaper, everyone's life becomes a lot cheaper. Because oil is literally at the center of our economy, and most people don't actually know that. To move anything on this planet, you need energy. And 9 times out of 10, that energy is going to be oil. But I digress.